please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to the show. We're counting down to what has actually been a good day for the market. Given the cues we started the day with, this is not a bad outcome at all. We've picked up to the high point and so much action in the broader markets. Mehraboon Irani, the MD and CEO of Ginny Gems Consultants, also joins in. Mehraboon, hi, afternoon. I want to discuss some of the buzzing stocks with you. Delta Corp really tops my list today because, you know, last week when there was talk that the Goa government has hiked the casino licensing fees, at that time the stock plummeted, but now we've seen a big recovery. What does an investor do here?
Well, I've been tracking Delta stock for nearly 17, 18 years, and I've always liked the stock, recommended it umpteen times on your channel, and maybe I'm speaking about this after a long gap. And I think the license fees hike is possibly prompting you to ask me this question, but I've always liked it because of the management. Supervision, great business which keeps on growing. Dampener, which happened last week and the stock reacted 18-20%, was the hike in license fees. Now we need to understand that a 10% hike, 15% hike was something which the market would have taken it in stride. But when you hike it by 2.5 to 5 times, well, it came as a big blow. So on the surface, it's a big blow. Definitely yes. But I personally feel it will be a big boon for Delta Corp, possibly in the medium to longer term. Why the Goa government did that, my personal feeling is because the entry tax which was going to the Goa government was taken care of by the GST. So there's a loss of revenue for the Goa government, for the local government. Secondly, there is a clear-cut plan to move to land-based casinos. Now this particular hike in license fees possibly could kill some of the smaller electronic casinos type of business which is being run on land right now. I personally believe the business is good, the business will keep on growing, and ultimately it will be a positive for Delta, because I personally think that some of the competitors now may not be able to cough up the sharp hike in license fees. So their business plus ultimately the growing business of casinos should be a big positive for Delta. Now, stock price correction, is it an opportunity to buy? 100% yes. Clear disclosure, I have been advising my clients over the last 2 days to buy into Delta, and possibly they have made some money today. But more important is, if this transition to land happens, which I believe could happen after the Chief Minister is back in place and starting to function, sitting in Goa, if that happens over the next 3-6 months, would be a big positive for Delta Corp. That is point number one. So that alone, plus the license in Daman, if it happens, when it happens, we have been waiting for a long time. These two positives, if I value the company, I think a stock price of even a 500 rupees ultimately will not surprise me. So I'm super bullish on Delta. I've always been super bullish for the last many years. The stock went to 400 rupees, came down sharply because of this particular news on license fees. The stock would have had bounced back today. A lot of people will call it as a dead cat bounce or something like it's come down sharply, so it is bouncing back. It's a high beta stock. True, everything is true. But at 260, 270, 280, I still feel the Delta is at least just 50-55% of its target of around 500 rupees, which I have given to my clients quite some time ago. So I am very bullish on Delta, and I believe that this sharp fall because of the hike in license fees, which was not expected, prime FSC negative, whatever the medium term positive, is a buying opportunity.
Okay, that's Delta, an emphatic buy for Mehraboon. Sugar production numbers coming out from ISMA. It's a known factor. We know that we are closing at almost close to 29 million tons. And look at the increase in production year on year. And of course, the fate has been visible with respect to sugar stocks because of the same. Right now, let's get you one more view. Someone who's been watching India from outside of the country for many years. We caught up with Adrian Moat, emerging equity market strategist earlier, to get a sense of what he thinks of the global market action and what he's expecting in 2018.
They are volatile, aren't they? We've had, since markets rallied nicely in the first couple of weeks of January, we've had a series of corrections, some reasonably big falls on a daily basis, with, again, that coming out of the US with the moves that we had on Monday. I think a number of things have changed, which are very important. If you go back to 2017, it was really a story of better macroeconomic data across both the developed and the emerging world. And in January, we were probably at peak optimism around that. We followed through with really some concerning policy issues. The US economy was robust. They've added to that a big fiscal boost with the tax cuts. You do that at a time when the Fed is starting to raise rates, and the probability that they have to raise rates faster increases with the tax policy. You then add to that the fear that the Trump administration has got less moderate voices in it with the changes that we've seen in that administration. And I think the prospects for economic activity in 2019 look less favorable than economic activity this year. And that seems to be what markets are pricing in. Within the emerging markets, I would also argue that China is probably moving to a slightly more tighter, less pro-growth policy. And we've also got a series of political events to consider in the major emerging markets, with the most recent one, or the one that that's about to come up, being the Mexican election. But we've got Brazilian elections, and at some point, we'll be starting to talk about an Indian election as well.
India has been a relative underperformer vis-a-vis other Asian markets in FY18, in 2018 calendar. But the last 2 days, we have seen some outperformance. Where would India figure in the pecking order now for the rest of 2018 for you?
Yes, so I think the factors that were hitting markets that would translate from US markets into emerging markets were twofold. There were the issues around the likes of Facebook and Amazon. Those would then translate into people selling down the Chinese ADRs, such as Alibaba, also Hong Kong-listed Tencent. As we've seen redemptions in tech funds, they tended to have more of an impact also in places like Taiwan and Korea, where you will get a strong correlation with the semiconductors, the tech hardware names from the US into Korea and Taiwan. India hasn't suffered from that same issue of correlation. And so I think it's often the situation that when you get corrections, that the market that's been a bit of a laggard will outperform a little bit in those corrections. I'm reluctant to read anything else into it at this point. I can't identify an India-specific story which would justify the outperformance over the last 48 hours.
We've seen a bunch of scams in the banking space that have hit us over the past fortnight or so. Started with the Punjab National Bank, and now even ICICI Bank is being questioned for loan disbursements, etc. As a long-term investor, how do you react to all of this? Because so far, the preference was for private sector banks, and PSU banks were being shunned, but now things are changing a bit. How have you reacted to all of that?
Well, I'm not really sure that the preference is changing here, because those that took a risk, so buying a lower valuation PSU bank, have been hit by these scandals. And so that the general rule to have stuck with the more expensive private sector bank would have been more defensive in this environment. I think also in that you started with the Punjab National Bank fraud case, and now we're seeing alluded that there might be other issues in the PSU banks and the quasi-PSU banks. I don't think that's an environment that would make me want to invest at this point in time. I'd really like to see a bit more detail coming out of this. And there is still the whole issue of, is there sufficient capital in some of these PSU banks at this point in time? So in a more cautious environment, you tend to just have to pay up for quality.
Okay, that's Adrian Moat. Quite cautious actually on the markets. Let's wind down the discussion with our guests. We have 3 more minutes to go. Mehraboon, one of the spaces of today clearly is the tire space. I mean, MRF now, hitting a market cap of 30,000, 35,000 crores. You think there's more value in any of these stocks, or is the move irrational?
Well, I like the space, and I think I would attribute the move possibly to the fact that the numbers which are coming, be it from two-wheelers, four-wheelers, tractors, everything, is very, very, very positive. And I think this trend possibly should continue for at least 1 more year. I have liked the space, and I've always stated my only concern is that I still take it as possibly a little bit of a commodity play because of rubber prices, and that also is under control. Now, what to buy, especially when people may try to argue that valuations are expensive, I still believe that among the tire companies or tire stocks, I still believe MRF and Balakrishna still stand out vis-a-vis the others, only for the simple reason that more investors are attached to these shares and they are not going to part with them easily. So the floating stock of this two, according to me, is the single biggest positive. So I know MRF is ruling it as all-time high, and so could be Balakrishna. But I still believe that these two are relatively better than the others. But if I was a trader, I think I would possibly opt for a stock which has become relatively under-owned vis-a-vis the others, and that is Apollo Tyres. I think for a pure trade, I would prefer Apollo Tyres, but from an investment angle, if I'm holding on to it, which I am clearly disclosing for our clients, I think MRF at number 1 and Balakrishna at number 2 among the tire stocks.
Okay, well, we've got just about a minute and a half to go before we start closing out the day. And it's been quite a nice session, actually, one would have to say, given all the negativity overnight, the way Asia closed, the way most of the European markets have been catching up with the losses as they come back with from the Easter weekend. Not bad, Sonia. I mean, 10,250 almost as far as the cash nifty goes.
Oh, absolutely, right. By the end of trade, we're actually closing at the high point, second day in a row. So that's always a good sign. Let's just take our viewers through what's been happening in terms of the frontliners. It was all about the banks today. The bank nifty saw a big boost by the end of trade, up almost about 0.8%, led by, surprise, surprise, ICICI Bank, up almost 3.5% there. Yes Bank, SBI gave it company. IndusInd Bank hit a new high today, by the way, has crossed that 1800 mark effortlessly. Apart from banks, it was NBFCs that did well. Indiabulls Housing, Bajaj Finserv, both these stocks up and about in trade. Lupin had some news flow, so that stock was up in the green. Reliance was supporting the market a bit, and Axis and Kotak Mahindra Bank were not too far behind. So let's see how that plays out, because now second day running we've seen some recovery. In fact, last week as well, the bank nifty was up almost about 4.5%. So recovery is definitely in place. On the downside, IT stocks have been under pressure. Tech Mahindra, Wipro, both down. HCL Tech in the red. Titan closes with losses of 1.5%. Cipla down in the red, and a couple of others like NTPC, Adani Ports, etc. were in the red. But I think the real winner today was the mid-cap space.
Oh, absolutely. There are lots of themes that played out today. One, definitely tire stocks. Two, definitely road contractors. And three, AC companies, if you could call them that. Let's start with tires. So MRF is one example. I also want to pull up Balakrishna Industries, because that's been the smartest mover with about a 7% up move today. And of course, others like Apollo Tyres had a good session for themselves as well. Now let's come to the road contractors. Ashoka Buildcon, yes, very, very smart and solid moves in that one. NCC managed a bit of an upswing as well for itself. In fact, we're talking almost 6.5% kind of move on NCC. IRB Infra 5%. Now you can't club HCC in this list for its other reasons about equity conversion, but nonetheless that stock was quite excited on prospects of some lenders getting a hold of the company's equity and basically the resolution process moving forward. Moving on, good day for Suzlon, 6% on the higher side. Second good day running for Gati, 5 to 6% on the upside. And NIIT is seeing some good buying, again about 6-7% up on that stock today as well. So something that you can't quite ignore. Those are some of the names. And then if you talk about other movers and shakers, we do have, of course, Delta Corp. That really is a star of the day, 13 to 14% on the higher side. Voltas, let's pull up. Voltas, of course, started the move, but towards the end, even something like Bajaj Electrics, when you're talking, consumer appliances, a big move towards the end of the day, 7 to 8% higher, 10% higher now on that stock as we are closing out. So literally lots of flair, whichever pocket you're looking at. Some of the larger stocks like BHEL, 4% on the higher side. You even had the likes of GMR, JP Associates, HDIL, a lot of these stocks that have different issues surrounding them, whether it's debt or some other issues. But anyway, all of them were on the upswing today. Decent enough for some of the banks, Bank of India, Syndicate Bank, some of these, Union Bank as well for that matter. Some of these PSUs managed to get buying traction because of the relief that came in from the RBI. Actually, as I sign off, Ashok Leyland saw some kind of a cool off after its endless run, I guess, Sonia. But not too many losers. Can't really point out too many of the big losers. Maybe in Oil India. But that's about it. It was really a green day for the mid-caps today.
Oh, absolutely. And tomorrow is interesting, right? We have the ICICI Securities listing that happens tomorrow. And we heard how that one, they actually cut the IPO size after under subscription. Mehraboon, there have been so many new listings. The IPO market has gotten heated up. Any of them that you like? And what's your own view on ICICI Securities?
Honestly, I think the valuation-wise, very expensive. As a company in the business for so many years, size-wise appreciated. But I personally believe that quite a few of this pricing would have happened possibly when people were looking at the markets way back in November, December, January. And now investors are becoming a little bit choosy. I think even if you look at the trend over the last 2 months, even in the secondary market, quite a few of the people moved from mid caps, small caps to large caps. And same as the thing, the fancy which was there for IPOs is definitely showing clear signs of waning. A great name otherwise like ICICI Securities meeting the fate and reducing the size possibly is a clear indicator and a clear example that the time now has come where merchant bankers in a way, the book runners in a way, and the company itself realizes the valuations now are not what they were. People are becoming more choosy, and therefore if you want to raise money, you need to offer something to investors on the table, which I personally believe with the price at which ICICI Securities has offered, there is not much room for investors to make money, certainly not on listing.
Okay, all right. Let's get final thoughts with our tech experts as well. So Ashwini, I mean, it's pretty, I guess, good going. Second day in a row. Okay, I don't think we have immediately, we don't have Ashwini as a link up with us. Mitesh, let me start with you then. How would you approach things tomorrow given today's action?
Yeah, so I think, for the timing, the drift looks positive. I think I spoke about this yesterday as well, that the breadth is very good, the mid-cap stocks are outperforming, and we should see follow-through on the upside. That has happened towards the last 1 hour. I think the Nifty managed to get past this 10,220, 230 zone. The Bank Nifty also, if you look at it, managed to close above the 24,450 zone. I think this should give some more upside traction. I think Nifty, I'm looking at 10,300, 320 as the next area, and possibly even higher levels could be tested. Similarly, on the Bank Nifty, 24,800 becomes your next target. And of course, the mid-cap stocks are outperforming, and a lot of stocks are hitting new highs, including stocks like tire stock, consumption stocks, etc. So I think broadly, with some choppiness also, I think the market drift, at least on an immediate basis for the next few days, is more likely to be upwards.
Okay. Ashwini, same question to you. How would you approach things tomorrow?
See, now, bear market rally, stroke consolidation, it's important not to become overexcited. It's a 180-point rally on the Bank Nifty, hardly, 40-odd points on the Nifty. So that is what it is. HDFC Bank and HDFC closed in the negative. So that shows you where institutional sentiment is. If you take out ICICI, maybe State Bank, I don't think there were too many gains. So this is an upward drift where mid caps are showing you spectacular gains. But at the end of the day, it means nothing if the market fails at 10,400, 500. So that needs to be kept in mind. Whenever you enter, you have to see whether you have enough shorts which are supporting you. Like today, Jubilant and Titan, etc., they came off. So a lot of it is short covering. It's not actual buying. So that needs to be kept in mind, that this may not be the real thing. And maybe 1 month from now, 1.5 months from now, you may be back to where we started from.
Okay, gentlemen, thanks very much for being with us and taking us through market close today. We need to take a quick break. On that note, let's give you some good news as we're doing that. The wait is over. The market leader in business news is now available at your fingertips. cnbctv18.com is coming soon on your phones. So stay connected with us and stay up to date with the latest market and financial news and insights with cnbctv18.com. This will be available on both iOS as well as Android devices. So you can catch the news, the views, and the videos that are important to you at the touch of a button. Welcome back. The National Highways Authority of India has set a target to award 8,000 kilometers in the new financial year, that's FY19. NHAI is hoping to award 4,000 kilometers in the first 3 months of the year itself. Earlier, we spoke with Deepak Kumar, chairman of NHAI. Take a look.
No, it has grown up from the last year. It was just 4,300. Now we have received 7,400, and we will be achieving more than 8,000 next year, this financial year. So that's the growth. We started our tenderings only in November, and we had target and November, and we have to give 45 days time for the tendering, then for the processing. So almost all the tenders started being finalized in the month of February and say second fortnight of February and then March. So that was due to that reason. But this year we hope to achieve not less than 4,000 kilometers in the first 3 months. Total target for construction was 3,500 kilometers, and I am talking about the total complete road length. When you break up into the lane kilometer, it will be much higher than that. So we will be achieving that target of around 3,500 kilometers this year. Why? The next year the ministry will be fixing us for it up, fixing us a target, and it will be around 4,000 kilometers, or it will be more than that. Target set was 90,000 crores, and we don't have the figure of the March, but till February end it was 71,000, much more than what we had spent last year. It was last year till February it was just 38,000 crores. So we had spent around 70,000 crore by the February end. We hope that it will be achieved. 90,000 crore would have been achieved in March. In the next year again we are targeting around 1,20,000 crore. It is a quantum jump from what we had achieved this year.
Moving forward, the e-way bill is finally here. Around 5.5 lakh e-way bills have been generated till 4 p.m. last evening. This includes over 2.5 lakh e-way bills which were generated on the 1st of April and around 2.9 lakh bills generated yesterday. Here's a ground report on how this is impacting intrastate movement of goods.
Well, after a flop show in February, the government has made a second attempt at rolling out e-way bill, this time with a stronger IT network. But does the e-way bill go out there and achieve the basic objective of ensuring smooth flow of goods across state borders? Let's find out. Well, I've decided to ride shotgun on this particular truck coming from the state of Andhra Pradesh, carrying auto components, and let's just understand from the driver himself if the new e-way bill regime has made any difference to his working day. सर, आप मुझे पहले ये बताइए, आप आंध्र प्रदेश से ये गाड़ी आता है महाराष्ट्र तक, कितना चेक पोस्ट आपको बीच में लगता है?
3 लगता है।
3 चेक पोस्ट। हाँ,
पहला चेक पोस्ट अपना वो लगता है हैदराबाद का जहराबाद का लगता है,
ठीक है।
दूसरा हुमनाबाद का लगता है, और तीसरा महाराष्ट्र में लगता है वो उमरगा, उस्मानाबाद जिले में उमरगा का लगता है। 1-1.5 घंटा एक चेक पोस्ट को 1-1.5 घंटा लगता है।
अच्छा, तो 3 मिला के आपका आराम से नहीं तो 5-6 घंटा चला जाता है?
हाँ, चला जाता है।
आपको सरकार ने ई-वे बिल लागू किया है, सबसे बड़े फायदे क्या देखने में मिले आपको?
हर दिन में 1-2 घंटा लगता है गाड़ी रुकने के लिए। प्रत्येक हर एक चेक पोस्ट में गाड़ी खड़ा करना पड़ता है हमारे को। हाँ। अब तो दिन में तो कुछ नहीं रुकने को जरूरत नहीं पड़ी हमारे को।
और आपका डीजल भी बहुत बर्बाद होता होगा चेक पोस्ट पे रुकने के, उधर कुछ फायदा आपको हुआ?
हमारा दिन में एक जगह पे कौन से चेक पोस्ट पे नहीं रुका। हाँ, वो चेक पोस्ट में नहीं रुका तो हमारा 100-200 रुपये डीजल का फायदा हो रहा। हाँ, हमारे को।
बहुत लोग ये भी बोल रहे हैं कि लोग बीच में आके ट्रक को रोक के ई-वे बिल मांग रहे हैं, आपके डॉक्यूमेंट्स मांग रहे हैं। आपको ऐसी कोई परेशानी का सामना करना पड़ा?
नहीं, हमारे को कोई भी अब तो ये दिन में तो कोई भी नहीं खड़ा किया रास्ते में।
So clearly, as far as the ground situation is concerned, it seems like good first couple of days for the e-way bill. But yes, informing these truckers about the various aspects of the bill remains to be a challenge, and the government would certainly hope that it's second time lucky as far as the rollout for e-way bill is concerned. In Mumbai, for CNBC TV 18, Yash Jain.
Okay, it's an economy trying to get into the fast lane. Moving on, in what could be the largest M&A deal in the general insurance sector in India so far, the winner of the race to acquire Star Health Insurance may be announced this month. CNBC TV 18 gets the latest on the bids and the likely front runner in the transaction. Nisha has those details. Nisha, fill us in.
So as the race for Star Health Insurance really comes to the close, and we do expect the announcement in this month itself, sources with direct knowledge share with us that Premji Invest, along with the global major insurance business Prudential, is the likely front runner for buying out Star Health Insurance. Now remember that there were 3 important bids that had come in. So along with Premji Invest and Prudential tie-up, there is also ICICI Lombard, the listed company, which is also also in the fray and is a formidable candidate, a tough competitor in this particular race. Along with that, Westbridge Capital and Kedara have also tied up to buy out Star Health Insurance. Now, all these bids have been in a very, very tight range between 5,500 to 6,000 crore rupees for buying out the whole of Star Health Insurance, is what I gather from sources with direct knowledge. But since it's a tough competition, Premji Invest and Prudential really have a better chance at this point because of two important reasons. First, of course, being that there is a global strategic which will come with its huge amount of value and expertise on this particular deal. And second being that they are offering the proposal to continue with the current management of Star Health Insurance. Also, they have offered an all-cash deal while ICICI Lombard has offered a share swap. So this is a hotly contested battle, and by the end of this month, we could be hearing who the winner is.
Okay, all right, Nisha, thanks very much for that. On that note, we need to take a quick break. We'll get you all the currency and commodity market action on the other side with Manisha Gupta.
Welcome back. Let's chat commodities now, and let's take a look at the crude oil prices to begin with, because we did see a 3% decline in the New York session yesterday, but Asia did see some opportunity buying at those levels, and in the European markets right now we are trading quite at those levels. So 0.25% is what we started Asia with, and 0.5% is what we have made it into, inching very close to $68 per barrel for the Brent prices there. But it is sugar that you should keep an eye on as well, because the latest ISMA output numbers have come in today. And according to that, we are already looking at a sugar output at 28.1 million tons as of on 31st of March. Remember, ISMA has put out a 29.5 million tons of a total output scenario this time around, and that has taken or has been pressurizing the sugar prices in the Indian markets. The global prices also are trading at 2.5-year lows. There is pressure there as well, because not just Indian markets are staring at a surplus this time around. The global markets also are looking at a huge sugar surplus, and that doesn't augur so well for the sugar industry, where you also have seen the cane arrears continue to gain up. The number that ISMA has put out today is 160 to 170 billion rupees as of 31st March, which is very close to an all-time high in sense of cane arrears that we saw a couple of years back. So clearly not such a great news for the industry, and you can see all of those stocks reacting as well. But done sugar and its almonds that are on our mind, and India's imports of almonds have been on the rise for last 6 months now. We are joined by Sudarshan Majumdar, who is the India head at the Almond Board of California. Sudarshan, hi, good to have you. Tell us more about the shipment trends really from the California almonds into India. What has been the growth trajectory like?
Our year is really August to July, and if you look at this year, even this year we've grown at 29% in the period from August to February, and we're already at 154 million pounds. Last year we overtook China, which was larger than us, and we became the second largest export destination for Californian almonds, and this year we're already the largest.
So Darshan, that's the imports, of course, into Indian markets, but what has been the growth production at California really, and what are the projections going ahead with the kind of demand that you just put out, not just from India but other countries? Is the growth clearly there?
The United States of America, or rather California, because that's the only state which grows almonds, has 80% of the global share. Long term, the growth of almonds has been, increasing. Last year, our production was 2.01 billion pounds, so there's been a big growth which has happened. Having said that, the production will also be highly dependent year on year on the weather conditions which prevails in that particular year. But long term, we see it growing.
And what are the future plans really for the Indian markets from the business perspective? What are you doing in sense of promotion, etc.? And do you actually see the consumption pattern that we have seen till time continue to be like that?
Yeah, I'll say two things. One is that India is becoming more and more important for the Californian almond industry world. The reason is that India shipments are robust, and our standing in the global shipments has continued to increase. So from ranked 4th to 5th, last year we ended up being the second largest export destination, and this year we are already the largest export destination so far. So clearly India is definitely a country under focused. Yes, there's seasonality in consumption in India. There's the fears of body heat. But what we have been doing is promoting the idea that if almonds are good for health, then you can have it at any time of the year. And what we are seeing is that if you look at the shipments, we are seeing a growth of shipments in the summer months. And if you if you talk to the importing community, they found over the years there's greater and greater consumption happening in the summer as well. So we are actually spreading out the consumption from Diwali stroke winter to be more of an all-India, all-year consumption product.
That clearly is quite surprising considering where the almond prices are going, because from 1,000 rupees per kg upwards is how the almond prices are in the Indian retail market at least. But having said that, what is the number? Do you see at these prices the Indian imports continuing to grow year-on-year basis?
So this year's import, and by year I mean our year is August to July because it's a crop year. So in 16-17, we had shipped 167 million pounds of crop to India. By pounds, I mean the weight pounds, not the value pounds. And in this year, when you look at, and that was a growth of, it was a growth of 32% of the previous year. Previous year, a year prior to that was 126 million pounds. This year, already we have shipped out from August to February, we have shipped out 154 million pounds, which is a growth of 29%. So there's a clear growth trajectory which is there, which is actually accelerated at this point in time. And I think there's a momentum picking up as a health messaging starts resounding with the consumers. If we take a longer term trend, in 2009-10, we have shipped out 84 million pounds, which has doubled to 167 million pounds last year. So between 2009-10 to 16-17. And we think that this is just the beginning and there's a huge potential for the market to continue to grow.
All right, we'll let you go at that. So that's a big, huge number that the California Board of Almond is throwing at us and saying that India is now the biggest importer of almond in the world. But there are other commodities which are doing equally busy, and Tapan Patel of LKP Securities now joins us to give us strategies on that. Tapan, hi. Almonds are done. What is your sense on the gold and silver prices? Because there is a lot of chat around that, especially with the wedding season on and the Akshaya Tritiya as a festival just a week, 10 days away. Do you see these prices picking up? And I mean, do you see the demand as well picking up?
Hi, Manisha. Good afternoon. Yes, I think the recent rally has also attracted interest from retail investors, especially in physical buying. So we can expect more demand coming in Akshaya Tritiya and wedding season. So I think the current fundamentals are also supporting the trade war between US and China, weaker dollar. So that the risk sentiment is there, and we can expect prices to rally towards 1350, 1360. And the key resistance at COMEX is at 1370 levels. So buying on dips is advisable for the short term, and we can expect the 30,800 to 780 a good buying range in a short term for the target of 30,900.
Tapan, coming on the crude oil prices, because 71 seems to be defending itself on the higher side. After 3% decline, we are 0.5% up right now. Would you say we are forming a range here?
Yes, I think the current rally in crude oil prices are mostly driven by supply factors. So yesterday's fall in price was supported by the increased supply from Russia, and we are market is awaiting the clarity from OPEC also, and from how the numbers from US productions are there. So we can expect this range to continue from $60 is a support level, and 65 to 67 is it can be a resistance level. So for short term, we can expect selling to continue, and sell on rise is advisable in crude oil. So selling around 4150 is good level to go short for the target of 4070.
Tapan, what is your sense on the industrial metals now? Because of course China is cutting output, and we also are looking at a seasonally strong quarter, this one. The data from China is all right as well. Is there anything that you're picking up on a longer side there?
Yes, I think the last week the base metals were very choppy, and from yesterday we have again a good trading range, and especially nickel has rallied from the support level of 850 to 840. So nickel is a good bet to go long in a short term to medium term, and we can expect 910 and 920 levels in medium term. So buying around 870 is a good level to go long. And apart from nickel, we can also expect some buying in zinc also for the target of 216, 218.
All right, so more buy calls coming in from Tapan. Thank you so much, Tapan. We'll let you go at that. Well, that of course is on commodities, and with that, it's a wrap up on this edition of Closing Bell as well. But after the bell comes up next.